Hi there, welcome to Kneppy Invest and welcome to March 6, 2025. I thought it would be really windy and wet by now, but Alfie is taking its time getting to Brisbane. I think it likes the water and it's just wanting to stay out over the Coral Sea and not move towards the coast. In fact, overnight it did a bit of a loop, but now it is moving towards the coast. So I'll be honest with you, I was a little bit surprised when I woke up this morning and we had calm winds. Absolutely calm winds. It was a bit of a shock to me because I expected landfall maybe tonight, early tomorrow morning, and I think it's been delayed by 24 hours. Now, we know the movement more than likely of Alfie is towards the coast, but sometimes they have a mind of their own and they can do weird things. They can wobble, that sort of thing. So we don't know where landfall is going to be exactly. That's almost an impossibility. Anyway, so there is a chance that I will lose power, particularly if the winds are a little bit stronger than I think they'll be. And that if that is the case, by the way, all the power where I live is underground, and I very rarely lose power, even in big storms, that sort of thing. But there is a chance because you just don't know what's going to happen outside your neighborhood, that sort of thing. Anyway, so there's a chance I might lose my power. And if that is the case, no videos from me. I haven't got any planned. Anyway, so this video is not about the weather. It's about the stock market or the ASX. And we have about 30 minutes left of trading today, 20 minutes left of normal trading, 10 minutes closing auction. And I'll be frank with you, when I saw the SGO down 0.51% when I opened this up, haven't really been following the market today. I was a little bit surprised. I expected a green day. I expected a pretty good day. And the whole reason behind that is because we had a really good lead in from Wall Street. NASDAQ up 1.4%, 1.3%. Where is it? 1.36%. Dow Jones up 1.14%. Even the Russell 2000 up 1%. So I expected a good day. And lo and behold, yeah, SGO is down 0.51%. But my disappointment turned more to intriguement because then I saw that the small caps and tech are both up. And so definitely, I would say, and we're going to confirm this when I go through the ASX today, that some of the big companies on the ASX have had a bit of a fall today. So I'm assuming the banks, maybe not mining, maybe not iron ore, but definitely the banks have had a bit of a drop today. Maybe, again, staples have had a bit of drop. I don't know. So it's going to be really intriguing to see what has really dropped today, what has led our market down. And I did have a quick peek at my own portfolio because I am heavily or more heavily invested in small caps and tech. And yes, my portfolio is up to date. So it's really good when your portfolio is up compared to the ASX 200. But yeah, it's not something you cheer about today because, you know, it's small caps and tech have had a really good day. It's just the way it goes. Anyway, so what I'll do today is I'll go through the ASX today, look into best and worst performing sectors, indices, and also companies. Also do the top 5 stocks of the day. And I did record the stock of the day, which happens to be West African Resources. Share price up 10.34% on the back. And if you remember, if you watched it, I mentioned West African Resources in yesterday's video because it looked like the share price was on the precipice of breaking out. Yesterday's share price was up about 6%, loose lips, and the company did release the results today. And I think the market is finally aware that this company is going to significantly increase their production in 2025 because they are starting a new mine and that's their plan, to double production. In fact, I think it's more than double production. So the company is actually looking quite cheap. And that's one of the reasons why I refuse to sell this company. Well, gold's going up. That's another reason. But I do think this company is quite cheap for their future potential. Anyway, so that's the stock of the day, West African Resources. The other 4 companies I'll mention in the stock of the day are John's Lyng Group. Simple reason why share price of that company is up big. Smartpay, share price has been in a significant decline. Share price up nicely today. D2O, is that Duxton Water? D2O, Duxton Water. They sold something to the government, water rights or entitlements. It's a fair bit. And share price should be up. I'm assuming share price is up. Yep, 7%. And Magellan Financial Group. They release funds under management. So when I have one of those companies in the top 5 stocks of the day, Another fairly boring day when it comes to announcements, and that is true for today. It's only down 0.46% now. A little bit of a rally, miniature rally. Anyway, and then we'll have a look at some of your comments if I have time, if I feel like it. There we go. Okay, so let's have a look at the ASX today. Obviously, this does not update, so you're going to have to refresh it. There it is. Tech is now up 0.54%. And in fact, tech has rallied nicely through the day from about 11 a.m. Not sure what's happening there. We could try to figure out if we look at trading economics and what has been happening today. Australia exports hit 11-month high. Imports fall slightly. Dollar languishing at 4-month low. That's not our dollar. It's American dollar. Japanese shares rise on Trump tariff relief. And Australia building permits surge in January. There you go. Okay, so back to this. So even though tech has rallied since 11, the XAO and XAO have dropped, although they did reach a bottom around about 1:30 p.m. And since then, they've been gradually going up. Anyway, by the way, on Livewire, we have 19 ASX stocks that should be on your radar, not the weather radar, on your personal radar. Anyway, so let's have a look at the best performing sectors. And we have a few in the green, but not highly in the green. Materials, IT, real estate, all up a little bit. A really bad day for energy. Not sure what's happening there. What's happening there? Well, we can check out. In fact, I'm going to open up energy and utilities. Discretionary down as well. Staples down. Banks down, I would say. Yep, banks down big. So that's one of the reasons why. It's one of the reasons why, with the banks down, while the Ex-Show has had a really bad day, but small caps and tech have not. There's no banks in small caps and tech. Those are the antithesis of small cap and tech. Well, maybe not true. There are small cap banks, I think. Anyway, but definitely not tech companies. But anyway, that's probably the reason why we do have a bit of a difference between the Ex-Show and, say, the small caps. Anyway, so let's have a look at why energy is down. Is it oil, uranium, coal? Those are three main ones. So let's have a look at this by markup. Woodside's down 5%. Did they go ex-dividend? That's the other thing you've got to remember. We are in ex-dividend month, and companies are going ex-dividend. And they went ex-dividend. So 83 cents, share price down $1.18. I think why we might end it there. That's the reason why energy is down big, because Woodside Energy went ex-dividend. Because other than that, it's a mix and match of red and green. So that's pretty boring. Just one company gone ex-dividend. Utilities, let's see if this is, maybe it's true for this as well. So AGL, Origin, APA, Meridian Energy, all down. And there's Duxton Water, which is in utility. That's interesting. I don't think these companies went ex-dividend. Let's have a look at AGL. That's down the most. AGL. By the way, they went ex-dividend on the 25th of February. There is something in Market Index where you can see which companies went ex-dividend. I'm trying to remember where it is. Dividend, upcoming dividends. So here we go. So we can see which companies went ex-dividend. Quite a few went ex-dividend today, including South32, BHP. So keep that in mind as well. Probably another reason why the Ex-Show is down is because BHP went ex-dividend. Also Rio Tinto. So in fact, we should have this listed by market cap. A lot of companies went ex-dividend today. Heaps of companies went ex-dividend. It's just littered, which is probably another reason why we're a little bit weak. Yeah. Our market is littered with companies going ex-dividend. Okay. Let's have a look at the ASX 20, down 0.87%. So keep in mind, again, a few of these companies went ex-dividend, including BHP. So if you look at the market cap of the ASX 20, banks have not had a good day. So CBA down 1.91%. CSL's down as well by about 2%. BHP only down slightly, even though it's gone ex-dividend. So obviously iron ore's had a good day, and Fortescue is up 1.2%. So backing that up. ANZ is also up 0.2%, but a lot of red here. So some of these companies did go ex-dividend, including Woodside and Rio Tinto, and maybe one or two others of these companies. So looks like today was a big ex-dividend day. Okay, let's turn our attention to the top gainers and top losers of the day. I'm not sure, RT, what I'm going to do now, DeLorean, I did not, DeLorean is definitely a company I should have mentioned. Someone did ask me about DeLorean yesterday's video. Are they operating cash flow negative? And we confirm that. They did release an interesting announcement today, which I thought was interesting. And the very fact share price is up 16% is good news for DeLorean. Share price up 16% on the back of DeLorean secures 6.1 million arena grant for major South Australia 1 facility upgrade. It's really interesting. When I read this, they've also released a presentation. When I read this, the announcement itself, not the title, I read this to enhance, so the Australian Renewable Energy Agency arena to enhance its SA1. I read that as dollars a Australian $1. I was like, that's not a lot, $1. It's not much at all, but it's 6.08 million, not $1. 6.08 million, and it's not dollar A1, it's SA1 bioenergy facility. I'm assuming that's in South Australia, and it is Edinburgh Parks, South Australia. Okay, let's have a look at the chart for DeLorean. DeLorean, named because of Back to the Future. Chart has been under pressure. I do have a sell. Actually, I should say this. I have sold out of DeLorean. And this is one of my, I needed to increase my cash, and this was one of the companies I did sell. Will I be regretting that? No, I never regret any time I sell or buy. I see it as an opportunity to learn. Anyway, so this was one of the companies I did sell. So I did sell at a nice profit, so I'm okay with that. But anyway, so I should just mention that. And we did have a moving average crossover. One of the reasons I sold, and the share price has popped up today. So I want to see a little bit more juice under the share price to get me more interested in DeLorean right now. The company itself is okay, but I only invest in high quality companies for the long term. Mostly. I also invest in what I see or perceive as really good quality, not quality, good value. If I see really good value, even though I will not consider the company to be high quality, I can invest in that company, not for the long term, say the medium term, until I see better value. So anyway, so that's that as well. But anyway, DeLorean, pretty good announcement, I think. Not the sort of announcement that would get me back in. I need to see something in the chart. Okay, so that's DeLorean. Pretty good day for that company. Other than that, let's turn our attention to top winners or top gainers by market cap. So gold, West African, Bellevue, Resolute, WA1 Resources had a really good day today. And some of these, Bellevue, Resolute, I believe Resolute is one of those companies that the chart has been looking pretty weak. Yep, pretty weak because of the Mali who kidnapped the directors or whatever. So it seems like some of these companies that have done really well in the gold sector, the more aligned or the more aligned. What's that word I'm thinking of? Not when you look at the charts aren't that good. So maybe some of these charts, Bellevue Gold could be starting to look a little bit more interesting. I thought once it got down to $1, that was really intriguing level, and the share price has rallied pretty nicely since then, up to almost $1 and not quite 40 cents, but definitely getting up to $1.31. So a nice little 30% rally from the $1 low. I don't think I'd buy this right now, but yeah, Resolute and Bellevue Gold are the more, I keep wanting to say misaligned, but it's not that. Anyway, John's Lyng Group up 10.47%. I think I am making an assumption that the reason the share price of that company is, I'll talk about this company later, by the way, so let's not talk about that now. And what else? We have nothing else here. So a few silver companies, gold companies here, and we also have Smartpay, which I'll talk about as well later in the video. It is in my top 5 stocks of the day. Now onto the top losers. And I don't think there's much to talk about here. I'm going through it really quickly. These are all small companies, apart from Australian Unity Office Fund. I don't care. And Vulcan Energy down 11%. This is one I'm going to have a quick look at. I don't remember this company releasing anything because announcements today were sparse, and I definitely would have missed this. In fact, they did receive a price query yesterday because the share price was up 15%. There you go. Now the share price is down 11.3%. What's going on here? Don't know. And it's just volatility. So I think I should move on, but I'm just going to have a quick look at the chart. Yeah, it's just noise, volatility, and maybe some day traders just having some fun and games. If you look at the 1 minute chart, funny enough, the share price on open this morning was up 11%. Share price was almost 440. Now it's 385. Is that right? Doesn't look right. Let's have a look at the daily chart. That can't be right. Did it close at that price? It's today's Thursday. Yeah, looks wrong. That looks wrong for some reason. No, the share price has been dropping all day. Yeah, it has been dropping all day. Anyway, so that's Vulcan. Not interested in this chart. Now, in saying that, I'm going to point out there's a nice little support level right there, and share price has bounced off that support level. So I'm being a bit too quick ruling this one out. If it does fall, that level is around about 370. So share price is not that much higher than 370. So just based off that, maybe. Now I'm going to put this into a watch list. I'm a little bit more intrigued about by Vulcan right now just because of where the share price is compared to that support level. But anyway, nothing's happening with that company apart from the chart share price going up and down like a yo-yo. And top losers by market cap. Woodside did sell out of Mesoblast as well. Share price has dropped below my sell price. I do have my rules, and I have to follow my rules. And because the share price has dropped below my sell price for Mesoblast, I've got it out. What else? Nothing else here. There is a company that share price is down in my top 5, I think. No, there's not. It's a good news story, top 5, or good news top 5 today. Okay, in talking about the top 5, let's go to that. So coming in number 5, we have Magellan Financial Group. Share price up 0.99%. I'm a little bit surprised by that. I actually did have a look at the share price before I started recording because I wanted to see if it was down. But Magellan Financial did release their funds under management, and it was a decrease. I'm waiting for the funds under management of this company to start increasing again. That would be a sign that it's turned around, but it keeps on decreasing. If not decreasing, staying the same. So in February, Magellan Financial Group experienced net outflows of 0.5 billion. It adds up. If you have net outflows of 0.5 billion 12 months in a row, that's a fair bit of money, which included net retail outflows of 0.2 and net institutional outflows of 0.3. So it's across the board. We haven't seen that before recently. We have seen net retail outflows, I think, but not net institutional outflows. But again, outflows, and I did expect the share price to be down. And one of the reasons why the share price might not be down as much as I thought it might is because the share price has dropped a fair bit in the last month. In fact, it wasn't that long ago, 30th of January, so just over a month ago, where the share price was $12.50. Now it's $8. So share price has dropped that's 33%. We'll say 40% in 1 month, or just over 1 month. And the chart was looking good before that. Not anymore. Not anymore. Share price, in fact, you can see how much the share price has dropped, by the way, since it's. I didn't realize the share price of this company, this fund, reached its high just before COVID-19. I thought it was after. So $72 just before. It did rebound all the way back up to like $66, $64 just after. But we really saw the share price move into a downtrend in the middle of 2021. And we have seen on occasion the chart starting to look good on a daily basis, the day chart, not the weekly chart. And we saw that recently between July and January. But then, it's just only short term. Anyway, so that's Magellan Financial Group. I don't like the chart at all. I don't see, there could be a bit of support. Sort of like Vulcan, you could probably argue there is a bit of support at $8. And the main reason behind that, you can see that the 2 times the share price has dropped $8 in the past year, or just over a year, in February last year, and also in May, or 3 times in fact, and June, the share price, or $8 has acted as a nice little support level, and the share price is there now, and the share price is staying just above it. In fact, we have seen the share price rally off this level quite a few times in the past 5 trading days. So interesting level for Magellan Financial Group as well. This is a possible trade. It's a low-risk trade, and the reason it's a low-risk trade, you can just buy just above $8, and if this level breaks, if it's no longer support, sell for a small loss. But there could be a nice bounce here, because I'd also say Magellan Financial Group is oversold because the share price has dropped a lot. And the way to verify that, if you really wanted to, I don't do this all that often, look at the relative strength index, and yeah, it's been oversold for the last week and a bit. Doesn't mean it's going to rebound, but it is something to keep in mind that there could be a bounce. I just want to get rid of you, RSI. There we go. So that's Magellan Financial Group coming in number 5. Usually wouldn't be in the 5th place, or even 4th or 3rd or 2nd place, unless it was significant funds under management change. Coming in number 2, we have, or no, not number 2, number 4. Getting ahead of myself. We have Duxton Water, D20, not 0. Always make that mistake. Share price up 6.61%. This company, Duxton, executes $121.3 million sale of water and entitlements. I have no idea how this works. And this was to the government. And I was intrigued by just how much this was, 121 million. And I thought, So they agreed to sell 30,000 megalitres of Australian water entitlements to the Australian government to support environmental water flows. So it's just really intriguing that we can do this, or we do this. But I was more intrigued, not around what the hell is happening here, how does this work, how do you sell water, but it's water entitlements. But I'm more intrigued by the 121.3 million. And then I went to, so I saw this announcement, and then I went to see how much they're valued, and they have a market cap of 215 million. It would have been way more intriguing if this company had a market cap of, say, 90 million, I would have been going, woo. So they're getting way more cash than the company is worth. Now, don't know the debt, that sort of thing. So the company could have a fair bit of debt, but the share price has rallied nicely, up 7% on this news. So pretty good, I suppose, announcement, and a pretty good reaction. Now, actually, I should say that a different way. It must be a pretty good announcement because the reaction from the market has been pretty good. I'm relying on the market and leading me in the right direction. So let's have a look at the chart for Duxton. And the first thing I notice when I look at this chart is not for me. Now, I'm not sure if I would classify Duxton Water as high quality. I assume pretty confidently that I would say this is not high quality. Daily chart does not look good. Weekly chart, yeah, it's done nothing for the last 6 years. It's gone sideways for the last 6 years. Anyway, maybe there is a bit of value here at these levels, but I don't know. So not for me, for Duxton, but nice. Yeah, 121.3 million. What are they going to do with that 121.3 million? I have no idea. Here we go. This disposal provides Duxton with the flexibility to rebalance its portfolio and unlock value for its shareholders. The board believes this transaction is likely to have a positive impact on the company's future profitability. Yes, I don't know this company well enough to know or believe what the management says. Duxton, unfortunately, got my little piece of paper on the floor here, and it keeps moving because I've got the fan on. Coming number 3, we have Smartpay. Share price up 17.5%, which is a nice move for this company because when we have a look at the chart, you'll see this company has been under the pump. Chart has been looking horrible. So this could be a bit of a turnaround. But we need to see proof, need to see confirmation. We need to see the bottom has been reached. We might see the share price drop or continue to drop after this. This could be just a one-off a day pump, or whatever you want, pump. I wouldn't call it a pump and dump, but it could be just a bit of a pump, share price increasing. Anyway, New Zealand acquiring update. Now, notice this was not marked price sensitive. The only reason I know they released an announcement is because I saw the share price up a fair bit. And I was like, why is the share price up a lot? And they did not release a price sensitive announcement. So anyway, so this sounded really positive, which I don't understand why this is not marked price sensitive, because it sounded really positive. Anyway, so through for February, a number of New Zealand merchants across a range of industries have been engaged with Smartpay in the pilot of the new Smartpay terminal and acquiring solution. The initial phase of the pilot has been successful with transactions processed, settlement processes confirmed, month-end same was provided, and very positive feedback from received from the customers. The company is now ready to expand the pilot to a broader network of both existing and new merchants over the coming months. This is a significant milestone for Smartpay and further executes on our strategic intent to be the leading trans-Tasman payments provider. I'm going to say that again. This is a significant milestone, yet it was not marked price sensitive. And with the share price up 17%, someone got it wrong. Someone got it wrong, or whoever made the decision, someone got it wrong. And this is the chart. In fact, the weekly chart doesn't look awful. Well, it sort of does. I lie. But if you have a look at the daily chart, yeah, before today, share price looked horrible. Now, maybe we have seen a bottom. Share price did get to about 43 cents back in the start of February, so 1 month ago. Share price did nice little rally, thing on sideways, and now the share price up today at 50 or 62 cents. The last time it was at this level was back in October. So it is an interesting level. This could be the turnaround or a turnaround. I wouldn't say the turnaround. Can there be more than one turnaround? No, I don't think there can be. This could be the turnaround for Smartpay or the beginning of the turnaround for this company. Anyway, so the negative sentiment might be, I was going to say failing. The negative sentiment might be dwindling. The negative sentiment might be dwindling. A bit of positive sentiment might be building. Smartpay coming in at number 3. Maybe it should have come in number 2 or even number 1. Coming in number 2, we have John's Lyng Group. And just like Smartpay, the chart for this company has been under the pump significantly. Now, the share price is only up 7.75%. Earlier, it was up like probably 10 to 12%. So what does this company do? They did not release anything today, by the way. It's not about them releasing an announcement. It's about the market being forward-looking, going, who could benefit from the tropical cyclone hitting a very large populated area of Australia? Who could benefit from that? Well, insurance companies not, but who works with insurance companies to fix houses or buildings, constructions that have been damaged by natural disasters? Wait, it's John's Lyng Group. They could benefit from a big natural disaster, which this might be. We don't know yet, but the damage could be quite significant. We just don't know. So the market is now thinking, yeah, John's Lyng Group could really benefit from tropical cyclone Alfie. I'm really interested to see this share price. Yeah, it didn't really rise. It rose on Monday. So I think that was like the first day where, oh, gee, there is a tropical cyclone heading for Queensland, and then dropped the next few days and then up again today. Now, this is not long after the company released absolutely horrific results. That was on the 25th of February. Share price, it looks like, did reach a low that day. So that's actually could be good news moving forward for John Lyng's group. There is a chance that even though I did mention that the market is forward-looking, I don't think the market is absolutely forward-looking to the extent of they're thinking a few years in advance. They're just thinking short-term forward-looking. And sometimes when you see the share price drop significantly after results, that's the really short-term focus people just selling. And then more longer-term focus people are thinking, this could be the worst it gets for John's Lyng Group. There's value at these levels, and possibly that is what the market is thinking. And they have faced some headwinds with the lack of natural disasters or good weather, just too much good weather. And maybe the market's going, ooh, things might be turning around for this company. Now, it is a risk because there could be just one natural disaster in Australia for the next 10 years. We just don't know. More than likely not, but so anyway, the chart still looks pretty bad. I have no interest in trading this, even though the share price is up today. But anyway, So I think Smartpay should be number 2 and John's Link Group number 3. Stock of the day is West African. Please be up 10%, up 11.94%. I was a little bit concerned it might have dropped a little bit. West African Resources did release their results today. Nice profits. Nice profits. I did mention this company in yesterday's video, ASX Daily Rundown video, saying it's primed for a bit of a breakout. I'm not sure if I said it like that, or it's right at resistance. And then they released results today. And as soon as I saw them releasing results, I went, okay, someone knew yesterday they were releasing results. I didn't know. And I think the market, or whoever was buying, just expected the market to react quite well. Now, I think there's 3 reasons why West African Resources has broken out. First is just gold prices. Second is the results, still look pretty good. And just based off the results, profit of 246 million and the markup, P ratio is 10. But I think the market is finally realizing that this company is going to significantly increase the production this year because they have a new mine in production soon. Kiaka, K-I-A-K-A. It's going to go into production this year. And they are planning to more than double production. So 246 million profit might look minuscule to the profit this company produces in the next few years. And these are long-term mines, long-life mines. Anyway, so West African Resources stock of the day, did a sell-on video, so have a look for that. I'll answer a few of your questions. Oh, AOF, sold asset and return to capital to shareholder. More REITs should be doing this. Oh, that is why Australian Unity office is down. Yeah, I actually went straight past that. I completely ignored it. I didn't really care. There you go. So settlement of, say, Kula Road, special distribution. I don't really have to focus on that at all. Now, if you go to TradingView and put AOF in this, you notice the share price has dropped a lot. It wouldn't have adjusted yet, but you can adjust for dividends. It wouldn't have adjusted yet, I don't think. Oh, it has. There you go. It has. So this is the true chart for Australian Unity Office because it adjusts for dividends. So this just shows you that the share price hasn't dropped. Because again, dividends aren't free. To get this special dividend, your capital drops by a similar amount. Dividends aren't free. They're not free cash. Then you have to decide what to do with that cash. And one of the reasons why Warren Buffett does not provide dividends to his shareholders is because he believes, and rightly so, that he's a much better capital allocator than the shareholders. And I would agree with him. So when a management of a company gives all their profit back to you as dividends, they're saying you can do a better job with this money than I can. And actually that is, if you really think about it, that is actually a little bit disturbing. Anyway, that's Australian Unity Office. Just James Dean says, more REITs should be doing this, return of capital to shareholder. I just have no interest in REITs. Unless I saw some really good value. And I'm not sure we're there yet. Mace 552 says, do you think the tide is starting to change for Droneshield and email payments according to their charts? Yes, with email. Don't know about Droneshield. So let's have a look right now. So the whole point of me doing this video is to have a look. And now I am trading email payments. So that's sort of a giveaway. I'm not trading Droneshield. So this is daily chart. This is starting to look a little bit more interesting. So we have a nice little rally and then the pullback. It looks like we have reached a new low. And that low was higher than the previous low. Now, what we want to see is the next high higher than the most recent high. So this is potentially the start of a new uptrend for Droneshield. I'd say potentially. Now, the one thing I don't like is the volume. The last few days has been quite low. I would have preferred some higher volume coming through. So potential turnaround for Droneshield. I will say that. Email payments is a little bit different. This has been all over the place, but I think the market got this one wrong. Share price dove on the 23rd of December by 22.22%. And I had got into a trade with this company at that point in time, and I didn't understand why the market was selling off. I forget what it was. Was it, what was it? Oh, I can't remember. My memory's too bad. 23rd of December, it was 23rd of December. Oh, leadership changes. Yeah, leadership changes. I didn't understand why the market punished email on that day. And you can see since then, the share price has returned back up to where it was. And the company did release, I think, really good results. This is, in my opinion, better than Droneshield. Particularly, or if you what I like to do is just have a look at the previous high and the share price. Oh, it's not quite at that previous high. It's just below it. It tried to break out a few days ago on Monday and has fallen just below that level. So I love to see the share price of email payments get above $1.02. That would be a really bullish move. But they had a really good volume coming in when they released their results. The share price has gone up since then. So it's looking really good for email payments. So I do like this chart. Probably more than Droneshield, but Droneshield is starting to look a little bit more intriguing. Mosticum says I can reach a larger audience and grow faster. I don't really care about that. Fantastico says Appen also got issued ASX aware letter yesterday, and I think I've been thinking about this. I've got another podcast mentioned this. In fact, I can tell you exactly what they said because it's in the description. So this was, where is it? I haven't listened to it. I just saw the what do you call it? The rundown of what they talk about. So this is QAV, Quality Add Value Investing in Shares, episode 809. Can't believe they've done 809 episodes. In this episode, we review recent half-yearly results and market volatility, discussing notable movements in the dummy portfolio compared to the benchmark, as well as significant shifts in commodities. We dive into reporting season surprises, exploring the lack of timely confession season disclosures and how that impacts investment decisions. So timely confession season disclosures. So companies are supposed to disclose if their results are going to be significantly different than their previous guidance. And what they're hinting at, and this other podcast are hinting at, is companies aren't doing that. And if you see share price of a company drop or rise significantly on the back of half-year results, are they doing that? Are they fully disclosing how the company is performing? And it seems like maybe ASIC are on top of this, or maybe ASX is on top of this with these aware letters. So I'm pretty sure this aware letter was, hey, look at the share price decreased. Have you been, fully disclosing how you think the company is performing? I won't go into Appen right now, but they're an aware letter right now. But at least a few aware letters have been sent in regards to exactly that. And you can see Appen share price is just all over the place, down big 3 days in a row, and the volatility in this company staying right away. Just James Dean says, every few years we get a new food fad. Come and go like waves on a beach. Except if it's a beach on a lake, there's no waves then. Really small ripples, but no waves. If you can't ride a wave on a surfboard or naturally, like body surfing, then it's not a wave, in my opinion. I will not go to a beach that has no waves. I just don't see the point. That's just me. Anyway, crazy for Guzmán y Gomez to trade such high PE. Can't disagree with you there. Can't disagree with you there at all. What's the next new fad going to be? Now, I'll say this. I do see a path where Guzmán y Gomez explodes in, I wouldn't say in valuation, but explodes in profitability. And it all is dependent on their successful international expansion plans. I don't think they'll be successful in the United States. I just don't see it. But definitely maybe Southeast Asia, maybe. So if they're not successful in their international plans, way overvalued. But if they are, that's the path I can see. Maybe they can grow significantly in the next 5 to 10 years. But it's a maybe. So you are planning on hope. And hope is not an investing strategy. In fact, I'd probably like to see some proof they are being successful before I even think about buying Guzmán y Gomez, unless the share price drops a lot. Louis Don says, hey, Kneppy, sorry to bother you again, but would you mind taking another look at Orthocell? I would also, full disclosure purposes, I actually have sold out of Orthocell. It's another one of my sells because it broke through my sell price. That's simple as that. Simple as that. So up 7.2% today. That's good because I sold today on this little rise. So I'm very happy with that. Anyway, so charts. Actually, we'll have a look at the chart here. I'm just going to have a look at the chart. Yeah, it just fell away. It just fell below this level. So when I see the share price fall below this, now the share price has responded today. And I was thinking, I'll just sell when the share price gets or bounces up to this level. And it has. Now, the problem with that is the share price could go on another tear or it could drop. Now, this could be just a little bit of a bounce, one-day bounce. The other reason is just the uncertainty in international markets. So Orthocell is more of a story stock at this point in time. And that's it. That's all I know about Orthocell. I could not tell you right now exactly what they do because for me, this was more of a trade. So they have a presentation and Rampler, that's right. FDA application submitted for 84 million time market. Yeah, so there is a possibility they might get FDA approval. Now I remember, yeah, FDA approval. And that could be the catalyst for me getting back in. If I do see FDA approval, easily get back in. And I think that's very important. I know a lot of, this is a really bad mindset, not only in investing, but also like Supercoach, that sort of thing. I held this player a few years ago. They did horribly. So I refused to buy this player anymore, even though they might be the best player in history. I just refused because a few years ago, they did not do well for me, or they were injured. And a lot of people have that same mindset with companies. I sold out of that company. Share price has increased since I sold. I can't buy back in. Why not? Why not? That's how I think. Anyway, so Orthocell, yeah, so it's all about FDA approval. It's still a story stock, mostly a story stock. They are selling stuff, but Rampler, but more of a story stock at this point in time. Just James Dean says Coronado, triple bottom on 5-year chart, 50-cent downside, $2 upside. Let's have a look at Coronado, CRN. CRN, just got to get my timer back on. And let's have a look at the weekly chart. Oh, share price has, oh, look at that chart. Coronado. So this is coal. This is coal, right? I'm pretty sure they're gold producer. So the double bottom, oh, this company hasn't been listed long. So the double bottom would be between 50 and 38 cents. Would you buy now? So you're saying 50-cent downside. I would say the downside is probably less than that. Now, that's depending on their financials. I'm assuming this company dropping revenue, the company is not profitable. That's one thing that concerns me is just dropping revenue. Why is revenue dropping year on year? That's quarter. Sorry, that's quarter. No, that would be annual, not semi-annual. Profit has dropped the last 3 years, but a lot of revenue, $3.8 billion of revenue. So I don't think the downside is them becoming broke or zero. Yeah, so what I might do for this, if I can find the rectangle, I always forget where the rectangle is. There it is. This is something I like to do. I put a nice little support area right there. Right there. So it is heading towards that area, that zone. It's very, very close to that zone. So yeah, so that could be a nice little buy price for Coronado. And the upside could be quite significant. Yeah, $2 upside, maybe even more, potentially. But it's coal and it's a commodity. And if coal prices just drop like a rock, who knows? I don't think that's going to happen, but yeah, it might. Yeah, what's EZZ done today, I wonder? It's down again, down to $1.68. So I have this in my super, not trading this at all. That means I'm not looking at the chart all that often for this company. I just think there's really good value at these prices. But again, the market can remain really irrational for a long period of time, and maybe the market is seeing something I don't. But we did see the share price try to rally today, but it failed. And the whole reason why it failed is because we have a lot of shareholders who bought at high prices, a lot, because the share price has dropped a fair bit. So we probably have a fair few shareholders who bought at, say, 450, that sort of price. Share price is more than half. They just need to get out. Share price has almost decreased 67% from the highs, even though the company is actually a better company than it was back then. That's the weird thing. This company, I think, is better placed right now than it was back then. But that just shows you that these sort of companies their share price can be quite volatile, and the share price can move up and down on nothing except sentiment. And the sentiment in this company is definitely negative. They released, I think, pretty good results. You can see the share price jumped up significantly on that day, up 13.9%. And then the selling came in on force. And what's happening there is the share price increase on that day. Some of these shareholders who bought at high prices probably didn't see it. They might have come in, or maybe at the end of the day, they saw the share price had risen. They go, oh, now's my time to sell. I can sell now. And then they start selling en masse, and there's not enough buyers to pick up all that enthusiasm of the sellers, and the share price just plunges. Simple as that. And then the sellers who want to get out see the share price dropping, like, oh, sell on market, sell on market. So you get a lot of sell on market, and when you get a lot of sell on market, share price will drop. That's enthusiasm. Selling on market is when you're enthusiastic, or selling or buying on market is when you're enthusiastic. If you're more patient, you're going to buy at a limit. You're going to put in a limit order. You're going to be more patient. So that's why I do emphasize enthusiasm. In this case, the sellers for EZZ are much more enthusiastic because they bought at high prices, share price has dropped a lot, and they just have to get out of this dog stock. This could be the greatest company in the world, but when the share price drops 67%, it's a dog stock. Amazon, classic example. It's got Amazon. It's got Amazon all the way back to 2000 and maybe it was just 2000. Why is that not working? Oh, there we go. It must have been something else. If you go all the way back to 2000, yeah, so Amazon share price dropped from 550 all the way down to 50 cents. So we're talking about 90% drop in Amazon. And yeah, there will be people selling during, when it got near the low, because this was a dog stock. Share price had dropped 90%. It's a dog stock. Anyway, so it might have been a dog stock then. I don't know. Anyway. Thank you, Angus Pugh. Thank you, Marianne Delonia. Bunnings could be a winner. Clinuvel, huge volume was capitulation, looking to top up. Yes, I think maybe I did mention that, I'm not sure. Possible capitulation. I just like the volume we have seen. What is the share price? What has the share price done today? Let's have a look. Oh, we've seen selling. So again, I like the volume, but then today what we saw down 7.5%. It's just the sellers coming in. Again, enthusiasm. So all these holders saw the share price has been rallying, and they went, oh, we can sell now at a higher price. Our loss won't be as big. And then today, en masse, they're just selling on market, forces share price down. And that is exactly what we've seen today. In fact, this is an engulfing pattern, which is fairly bearish. Fairly bearish. And the selling began, in fact, the share price opened higher. There we go, opened higher. And then the selling began soon after that and really accelerated at about, 2. In fact, there was not much. Actually, I'm looking at the wrong time. So, there was nothing much happening through most of today. And then the selling really happened at 2:03 p.m. I think someone just sold on market. And that led to a rush for the exits. And you can see just the increase in volume. at that point in time as well. Okay, that's all I have for today's video. If you have any questions, any thoughts, leave. Oh, no, actually, we'll do one more. Fortescue looks near multi-year low. Thoughts? Then Fantastico says, dividend got cut, reduced. Fortescue. Okay, a few thoughts when it comes to mining companies. They are not high quality. They're beholden to the underlying commodity they are mining. Fortescue, financial performance will be dependent to a large extent on the price of iron ore. So when iron ore goes up, Fortescue's price should go up. When iron ore goes down, price of Fortescue should go down. Not absolutely, but they are in line. Now, there are things the management can do, but those are smaller things compared to the price of the underlying commodity. For instance, BHP is pivoting towards copper. So they are moving from iron ore to copper. Iron ore is still a great cash producer for them. But if you have a look, I noticed this at least the last two financial reports from BHP, they always mention copper first. And then I heard it straight from the horse's mouth. They are focusing more on copper. They believe there is some really big tailwinds behind copper over the next few decades. Anyway, so that is something management are doing for BHP. They're not getting to lithium. Rio Tinto has gone into lithium. So there are things that management can do, but in the end, it all comes back to the commodity. So I'm not sure what Fortescue is doing, that sort of thing. Like Twiggy wanted to get into green energy. I forget. I'm not even sure if they're doing that anymore. And if you have a look at iron ore, the price of iron ore, here we go. It greatly mirrors Fortescue. Not perfectly. In fact, you can actually do that. Fortescue. And then what you do is you put on iron ore, which is FEF2. FEF2, what is it? This one? Where is it? Oh, I didn't add. FMG, sorry, I didn't add. New price scale. And I'll get rid of the moving averages. There we go. And in fact, I'll make them both lines. How's that? Both lines. And you can see there is a mirroring between iron ore and Fortescue. It's almost perfect mirroring. So Fortescue, it all comes back to iron ore price. What do you think about iron ore? And I'll be honest with you, I'm not an expert on iron ore. It could go up, it could go down from here. The one thing I would say is when iron ore if it does get to a really low point, like 2015, 2016, that's the time to be excited about iron ore companies. When it gets too high, less so. Sort of like what we saw back in fact, if you have a look at the weekly chart, oh, we don't go back far enough. It's probably the wrong iron ore. But you can just see in the daily chart, there's a mirroring here. There's a correlation. Okay, that's all I have for today's video. If you have any questions, by the way, did I answer that? Fortescue, in fact, I'm going to go back to Fortescue. Fortescue, FMG. And we'll go back to candles. And we'll go back to moving averages. And we'll have a look at the weekly chart. And I have to get rid of you. There we go. Yeah, well, I don't know. It's interesting. If you have a look at the weekly chart, it's just had a moving average crossover back in October. And that means that the share price of Fortescue was in a weekly uptrend for about 5, almost 6 years. In fact, it had a breakout back at $2, and the moving average crossover we had recently was almost $20. So it was a 10-bagger from the two moving average crossovers. There you go. Fortescue really benefited from that 6-year period. But iron ore, if you have a look at iron ore prices during that period, you'll notice that iron ore went through a massive bull run from 2018 through to 2021. In fact, iron ore went above $200. So Fortescue really benefited from that. Iron ore prices have pulled back, and Fortescue prices have pulled back as well. Okay, that's all I have for this video. Third time lucky. And if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.